right, so what exactly are earnings reports, right? So an earnings report really constitutes of five things, right? One is the management discussions and recommendations. They're the little bit of market risk disclosures, right? So the reason why they're the market risk disclosures is, they kind of frame things in context, like, hey, this is what's happening in the market now. These are the risks that we're seeing. Balance sheet, very black and white, right? This is the assets and liabilities of a company. Income statement, very important, because it's in the income statement, that's where we find a lot of the key numbers, right? That we'll be taking a little bit of look into later. Cash flow statement, more important but not that important, if you ask me, right? Because cash flow statement, just seeing how much cash people need. Companies do need cash. Cash is still king, to survive. Can you pay your vendors, right? Important stuff, but if you think about it, is it really necessary to use this to trade? Not necessary, if you ask me. Let's use a little bit of filtering. All right, company's earning report is very good to gauge its performance and financial position, right? So what you look for is earnings per share. This is the actual earnings per share that the company released, right? This was the consensus EPS forecast. That means this was what the analysts were expecting, right? This is the number of estimates over here. So this was number of analysts that were estimating the EPS price, right? And of course, the big thing is when there's a big difference between what the EPS is. For example, for BlackRock, 9.55 versus the 7.70. Now remember, a percentage surprise can be positive or negative, right? If this case, right, when the forecast, right, is lower than the actual earnings per share, it's a good surprise, right? The market is like, awesome, that's good news, right? The surprise is positive, right? On the flip side, right, if your forecast is higher than the actual earnings per share, then suddenly it's not a nice surprise, it's a nasty surprise. Right, BlackRock, right, the forecast was 7.7, the earnings was actually 9.55, right? So the performance of it was, there's a 24% positive surprise. What happened from there is that you can see price, the market gapped down, the beginning of the market, pre-market trading hours, right? And then it shot up very nicely from there, right? So it's not only the initial, so this is the 1 hour chart, right? So you usually have enough momentum to take you through the rest of the day. Right, so PGR, same thing, earnings report release pre-market trading hours, right? It pushed prices all the way down. But at the same time, this is the interesting thing about here. Even though you're a negative 60%, right, you would expect people to kind of push it further down, right? But what happened immediately after is that prices actually retrace, bounce up nicely before further dropping down. The reason for that is that, let me just take out my handy dandy drawing tool, right? This is the Wild Wild West. A lot of crazy stuff happens over here when prices, get down. The key thing I want to take note of, right, if you zoom out on the higher time frame, is that yes, we are in this level, and that's the benefit of going to higher time frame. This level stretches all the way back to this, to not only a normal level, right, and it goes all the way back to 2019, where this level was tested. Okay, if you look closely, what's the kind of pattern that we're looking at over here? This could be something like a cup and handle pattern, right? So it might be breaking out from here. A lot of that hinges on the earnings report, right? A lot of that hinges on the earnings report. So two things can happen, right? If you have a good earnings report, you're going to see price do a nice little shoot up, right? And with the momentum here, you take the trade, okay? If there's a good earnings report that is released, what is going to happen is that in pre-market trading hours, prices are going to probably gap up crazily, right? It might gap up all the way to here, right? Maybe over here. What you want to do is wait for the pullback, right? They're going to gap up. The market will, there might be a lot of activity, push prices up. Then, there'll be usually, right, what I feel is the better entry price. Wait for, this is clearly a key level, right? It's a key level. So you kind of want to wait for markets to pull back a bit and then look to get in to play the, with the momentum that we have, right? Short-term momentum, cup and handle formation, and good earnings report, kind of all nudging it upwards, right? You're gonna have enough momentum to take it forward. APLD had a positive surprise of 33%, so it did fairly well, right? It did fairly well. This was the this was where the earnings report was released, okay? Right at this level, right? I'm just going to draw a vertical line right at this level over here. This was when the earnings report was released. Now, let's go back to establishing. Where was the resistance? This was the resistance, right? Clearly, this is resistance. Price bounce off once. Right, there's a little bit of the triple bottom, double bottom kind of formation. Nice little breakout. There's a lot of bullish momentum pushing prices up. And then there's a positive earnings report, even pushing prices up. Once this happens, you play the move all the way up to the next big resistance level. Right, in this case, I might have just played it to this level over here. Right, this was another resistance level because I'm a short-term trader.